trading a Robinhood account from $3,000 all the way to $1 million, and I'm showing you every step of the way how I get there. As of Friday, October 3rd, we did close the account at $35,486, and we were up almost $850 on the week. Not too much of a change week over week, but really what I want to cover here in this video is, of course, an update on the account, where current positions and strategies are looking into year end, as well as looking at some of the stocks that have actually had a pullback. So like Hims and Hers Health, as well as Unity Software, those stocks have been dropping this week, and we're going to talk a little bit of why that's happening and how I think things are going to trade into year end. And then, of course, nbis, that's like the biggest position that we're bullish on right now in the account. I'm going to talk about the strategy there. And then like Apple and Amazon, Zeta, some of these other stocks, I still am really bullish pretty much on everything. On risk assets like crypto, we have Litecoin, almost $1,000 in it. We are now up on that position. Bitcoin just hit 125K. Ethereum is also trying to break out. So I'm going to show all of that here in this video, give you guys a lot of different tips and tricks just to how you actually pick contracts, how you size into certain positions relative to your portfolio value. I just see a lot of people kind of just throwing things at the wall, hoping something sticks. And in this portfolio, you can see that almost everything that I'm using are these debit spreads. And that's really just because the portfolio is smaller. Whereas usually at any given time, I'm trading around $200,000 in my other options portfolio and then just rolling profits into my long-term portfolio. So like setting up not just the different accounts, but position sizing and then having the right portfolios, right? You probably want to have more than one. Obviously, you want to have like a rollover IRA or a 401k. Then you want to have a Roth IRA. If you don't already, that's a tax advantaged account, so you can grow tax free. And then having like an options portfolio is great as well. So you have like different strategies within different portfolios as a complete picture of your net worth. And that way you can utilize different strategies and really just organize your thoughts of like how you should be treating each one of those portfolios. Because obviously if you were just trading 100% of your net worth in options, it's extremely volatile. It's very risky. So you want to have more stable income producing portfolios, but then you also want to be taking a bit more risk when it makes sense for you to do so. Like this year has been great for trading options because there's way more volatility. We had the really big drop in April, and now everything is roaring to the upside. And so using different portfolios is definitely very important. But just flipping through this one specifically, obviously we're still long and strong on NIO, the Chinese EV manufacturer. They're starting to heat up, releasing different lines. Deliveries are starting to look very good. XPeng is also a competitor in China. I really like that company as well. These two companies I think are going to do really well as compared to like a BYD, which is the number one market share, the market leader in China. The reason I like the smaller ones is because what are they doing? They're growing and stealing market share from the bigger players, and they're also expanding globally. So really like NIO. I have sold some covered calls because it's run up crazy over the last few months. And so really I'm at the standpoint now, like obviously the total return number looks great here on options as well as shares. We're up almost 75%, but I'm starting to consider taxes. So as your account grows and you have positions, you have to consider when you actually bought certain contracts or shares, so then you can be eligible for long-term capital gains, and then you don't have to pay short-term capital gain taxes. And so a lot of these positions actually, like when I bought them, were almost a year ago when we first started the challenge account. You can see my expiration date here is in January, but I bought them in November. So the short covered calls that I'm selling against these positions, I have to ensure that I don't get assigned until after that year has passed. So we're trying to stay in this trade and provide enough room on the covered calls so then I don't get assigned ahead of time. And so that's kind of the different, I guess, really the challenge that we have on this current position. So trying to avoid having to pay higher taxes on that. And then Grab, kind of like a similar situation there. Grab and Neo is like the first things that we bought in this account for the long term. Grab has been breaking out, which is really doing well. I think this position is going to continue to grow. We're up pretty good on options, 23% on shares. I think this position into next year, the company is just going to continue to grow its free cash flow. It has a huge cash position. I think this can be closer to $35 to $40 billion market cap. It's currently around 28 billion, I believe, with about $7 billion in cash. So still long and strong Grab. I think it's going to continue to do well. It's probably most likely going to have another leg up towards $7.50 to even $8, hopefully by the end of the year, because a lot of these contracts that I have here are January. So hoping to get long-term cap gains on those as well. So as you can see here, like the strategies do change, not just around the positions, but around taxes and those considerations. So you should be looking at all those things. When you have a smaller account, it's not as important because taxes aren't really that big of a dollar amount. When you start getting into hundreds of thousands of dollars of profit, as we continue to grow this account towards $1 million, then we're going to have to start factoring in a lot of those things. For now, I'm just going to be paying taxes out of my own pocket so you can see like the total growth of this account. Hims and Hers Health had a big setback. Unity also had a big setback. bmnr, that was a new position we added because we are bullish Bitcoin in October and November. Usually they do really well, just crypto in general runs. So I think we're going to see a lot of upside there. And then same thing with SharpLink Gaming. Upwork had a bit of a pullback. We're trying to hold $17.80. That's the breakout level. And then Tesla now is releasing something new. This could be drones, potentially partnering with ACHR. So we're going to get some news there on the 7th, whether it's flying cars or just drones of their own, robotics. I think this could be a big catalyst for Tesla. As well as potentially Archer. There's some rumors that the Archer logo was shown on the Tesla screen in one of the videos. So we could see some big moves there. Archer already ran up on Friday. Looks like people are starting to speculate that that could be happening. And then we are buying the dip on Unity Software, kind of spray and pray in here with the meme that you see. But Intuitive Machines, I think this one could continue higher. There was actually pretty high short interest on Lunar. You can see here 29 million plus the 1.2 million. I think this one can head towards $13 to $13.50. 13.43 is the level to watch out for, as well as these space ETFs, UFO and ARKX are starting to break all-time highs. And so there's a lot of speculation now on these like smaller companies. You just had short squeezes in Quantum with Rigetti, IonQ. So really bullish here, high short interest. We could squeeze out some of the shorts as we go into a lower rate environment and people are speculating a bit more. And then of course, like nbis, White Fiber, and CoreWeave, I'm bullish on all three of these. There's a lot of talks about how much CapEx in the trillions of dollars over the next few years from NVIDIA's Jensen. There's just a lot of money going into capacity around data centers, and they're going to flow down to these smaller players because Microsoft, Amazon, Oracle, all these companies can't build out all their own infrastructure quickly enough to service all the capacity that's required for AI related workloads. And so really bullish on all three of these. White Fiber is a newer one where it kind of retrofits warehouses, facilities, factories. They even turned a mattress factory into a data center, and they're able to do it at a much faster speed than building out these greenfield data centers from the ground up. And so there's some value in there, and how many megawatts they're going to have next year is supposed to grow considerably towards 76 megawatts by the end of next year. And that could potentially probably 2 or 3x the stock price from today, but they do have a pretty low cash position. So that's like the biggest threat there is White Fiber just recently IPO'd and in 180 days, the lockup period ends, so you could have downward momentum on price, as well as the fact that they might have to dilute once again. What I'm hoping is that I can catch the dilution, or even around the lockup period. Maybe it continues to go higher into February or March, but then in February or March, it starts to sell off, the lockup period ends, and then maybe that's the time to buy the dip. So really just being patient on a lot of these. Obviously, we have a lot of exposure with nbis in all of our portfolios. So that one is probably going to push towards 140 over the next few weeks here. That is right near the convertible note dilution level at $138 roughly. And so 8% of the market cap could be diluted around that time. So we definitely want to be very cautious on nbis, especially if you are in shorter dated naked calls. For me, all of my strikes are well below that level. nbis is now trading at $129 during Friday's trading time. It hit around 133. So all of these are likely just to expire fully in the money. So I just have to wait to collect on these positions. So overall, not too bad of a trade here. They could do like some other level of dilution, but they do have a pretty good cash position since they just did all of those offerings about a month ago. So overall, the portfolio is really looking good. Like Unity, we started to scale into. We did take some profit out just in case. We did de-risk the position. Really, I think explaining a lot of these things, we can just like hop into the charts and go through all of those things. But if you aren't already, I do post all of the trades in here for free in both my long-term account as well as the Robinhood portfolio. I post all the entries and exits that you're seeing here. So definitely check that out. Now, hopping into the charts, let's just first look at Bitcoin, because in the last few videos, we've been talking about this bull flag forming. We finally broke through, and then we pushed to all-time highs. Usually when you have a break of all-time highs, that's a 125K. These whole numbers are usually psychological resistance levels, but you had a break of all-time highs and it pushed back down. It will most likely kind of chop around here and then probably continue a bit higher. This has been coiling for a few months now, and with this breakout, it's more than likely after all these like liquidation headlines that you were seeing, all the sellers and weak hands got shaken out, and now price is just continuing higher. So hopefully we see a bigger move towards like 130 to 135K on Bitcoin in the next month or so. And with that, I would really like to see Ethereum also break out. So you can see it's kind of in a similar bull flag structure. The upper trend line is being tested twice now. It's rejected. We want to see it hold this 4,500 level and then continue to push towards 4,800. Maybe it'll come back down, retest the breakout, and then start to push through towards all-time highs. Ethereum is doing well just because of all these Ethereum treasuries like Bitmine with Tom Lee, and they're just pumping it on the internet at all times to retail. I don't think that you should be in this trade for too long. I would like to see it kind of push through, and with that, we'll make a lot of money on bmnr. There might be a mNAV explosion to the upside is what we would like to see. And really what that is kind of like a multiplier of the spot price of Ethereum. And the higher that is, you could actually see bmnr start to push and squeeze some people out that are trying to short it. But really we're looking to see a break of this upper trend line, start to push towards 70, 80, maybe even start to get back up here towards like 90 to 100 range. It is very risky. So just keep that in mind. If you weren't already in this trade and selling some covered calls above, which is what we're doing on SharpLink, as well as using debit spreads on Bitmine. But with SharpLink 1766, we finally held above that level. We filled the previous gap. Ethereum is pushing. I think it will break out over the next 1 to 2 months. We'll probably see a push towards this lower volume node on sbet right around $21. Hopefully break through that, start to get towards 24. I'm already selling 20 to 21 covered calls. I might do one more roll on this position and then probably just let it expire in the money. Maybe it'll get towards 24. I'll probably try to roll towards 24 in probably like late October, November dates on the covered calls that we're selling against the $16 strike January dates that we have. So hopefully we can kind of get this chop grind higher, start to push through here, and then make a pretty good profit on that position. So the other one thing that we do have in the account is Litecoin. Litecoin is inside of this very large pattern. Right now, the government shutdown is putting a pause to the approval of the Litecoin ETFs that were supposed to happen in early October. Because the government shut down, it's going to delay it like about a week or two. That's not really a big deal. They actually made the filing for the ETF approval easier. So there's not as much paperwork involved. So it should pass. That's like 96, 97%. Virtually all of these ETFs are going to be approved. And Litecoin will likely push towards this upper trend line and eventually break out, push towards 140, maybe reject, hit the retest. You could buy in there on a retest. And then Litecoin is trailing very, very much so all the other larger, well-known crypto coins. And we'll probably see a push towards like 167. I'll take most of my profit around that level and then hold some runners here to see if 200 plus can trade and then just kind of scale out into strength, take the win, and then move on to the next thing. But with the approval of all these ETFs, there's going to be a lot of buying pressure from institutions as they have to buy underlying Litecoin as people purchase the ETFs, which is just going to be a lot easier for retail to buy Litecoin directly instead of having a crypto wallet. Let's look at some of the other trades that are not doing so well right now. So Hims and Hers Health, we did enter around $46 on a lot of these contracts. We also had like October dates that we made like over 150, 200% on. So we're still doing well in the trade. We're still green on the position since we entered on this green candle as it broke back over the 46.16 level, which is a low volume node. Now you had this pretty big drop this week. On Wednesday, Trump announced Trump RX. They're going to try to sell prescription drugs through the White House. And then Hims and Hers Health on Friday, Novo Nordisk partnered with Costco. They're also going to be selling obesity pills online, but in Costco, they'll be selling Ozempic. But it's at a $500 price point, which is much more expensive than what Hims is charging for kind of like their knockoff of Ozempic. But nonetheless, there's still a lot of short interest here on Hims and Hers Health. It's standing around 38%. It was down from like 42 to 38. So it's extremely elevated. Days to cover is around 4 days. What we're really looking to see here is the Zava acquisition. We want some sort of news catalyst to squeeze out these shorts. They're sitting in this position. Maybe they're starting to cover out of this position as the price is dropping lower. But I think over the next 2 to 3 months, this is a huge opportunity for Hims to push towards this upper green trend line, right? So we had the first all-time highs. Then we had a second reaction here where it didn't quite get over that level. I think we're going to push towards this 60 to 64 to 69 area. So we hit the $60.40 level, which is that low volume node, and rejected. Unfortunately, we did not take any sort of profit on like November or December dates. Even in the naked calls that we're having, we're just kind of holding strong through this pullback. There's also another, like this Zava acquisition expands Hims and Hers Health globally, specifically more so in Europe, in a couple different countries there like Ireland and France. But that's going to be a positive catalyst for growth as they're expanding into Europe. And then as well as this is an all cash deal. So there's not any direct shareholder dilution. So that's kind of good as well. But this is expected to close sometime in the second half of 2025. So we're through Q3, no announcement yet of this closing. Hopefully that happens somewhat soon. And then potentially we could see a really strong move, squeeze out these shorts. And then on top of that, and I can actually show you here on Twitter, Defiance is actually releasing 3x leveraged. Here you go. So you got 3x long and 3x short Hims ETFs. So they just filed for those. Those are effective in December on the 17th. That could also be a bullish catalyst just because that provides more money, more exposure into HIMS, the underlying stock. It could make it more volatile. It could also amplify trend momentum as these products use derivatives, specifically swaps, that are reset at the end of the day. So they will either buy more if there's a green day, then another green day, then another green day. It will actually push a feedback mechanism as the rebalancing happens each day. So it actually creates more volatility on the underlying stock. And so that would be good for us because more volatility, more chance for the shorts to get squeezed out. So there's two really bullish catalysts, the Zava acquisition, as well as the potential there to get those ETFs approved and just have more money chasing after this stock, which could squeeze out the short. So we're monitoring short interest as well as levels. If this continues to drop, I'm going to continue to buy most likely some March naked calls around $65 to even $70, because if this green line does break out, we're more than likely to test 73 but continue to squeeze higher, since if you just looked at this on a weekly chart, you had this really bullish move to the upside, a huge reset. Now it's pushed all the way back and it's consolidating in this big range from $40 all the way to $70. And at some point it's going to break out either to the upside or to the downside. My bet is to the upside. It's more than likely those people who are around 40% short are going to get squeezed out, and that's going to be a very bullish move. If it falls much further and short interest increases or stays the same, it's a great opportunity to buy some 5-6 month out contracts, just so then you're covering your own ass. But I think it can push towards 80, 85, 90 in the next bull run as it pushes through here with lower rates into the end of the year. We just need to see how Q3 earnings go, which is in the second week of November. So really bullish there. Tesla had this really extended move. Now it's trying to pull back and consolidate with the 10/7 announcement, depending on what that is, which is on Tuesday. If that's something drone related, robotics related, that could be really bullish for this stock as well, as Tesla is trying to get away from the car business, as China is more than likely going to take that whole space over because they can just copy pasta any sort of technology, manufacturing, and sell cars at a much cheaper price. So NIO and XPEV are going to do well. But Tesla's trying to go more into robotics. And if it can achieve that with Optimus, maybe they start going into this drone technology, you're going to see Tesla kind of reprice itself, its valuation on all of those futuristic things rather than the car business. And you can see a push much higher. Now, Upwork, it did break back below that 1780 level. Friday was a bit dicey as far as stocks go. There's a bit of bigger sell in the afternoon, but Upwork is still trying to break out of this really long consolidation bottoming pattern. And I still think it can push towards $25, obviously around this low volume node around $20, and then try to get through this lower volume area. You can see where it's rejected in the past around 25. So that would be probably my target into February or March. And then of course we got to see how earnings go. So earnings are going to be a big deal in Q3. I think most will end up doing really well. nbis, just one of the bigger positions, of course. They did push through at $138, just roughly. That's the dilution level, right? So we're going to push up there. It has to get around 8% dilution, as convertible note holders will convert into common stock. And when they do that, that'll be about a day's worth of volume. So it's around 19 million shares that will enter the market around that 140-ish area. Maybe it'll be gradual, so it can continue a bit higher towards 150. But like I said, that 8% is really only a day's worth of volume. So it could consolidate for a bit, about a period of time before it has its next leg higher over 150 to $200, as it's more than likely that nbis will actually get another deal. They have the Microsoft deal. They just purchased a bunch of acres in Alabama for another build out. it's more than likely that like Amazon or Oracle will probably partner with nbis. We'll get an announcement there, and that'll be another catalyst to push this much higher. It's only at a 32 billion market cap. It's more than likely going to push towards 50 to even 60, maybe even a bit higher than that, probably next year. So very, very, very bullish on this company. You could also play 2x nbis if you would like to as well with nbx. And then Wi-Fi, white fiber. This is the one that retrofits factories, does those build out, and then leases out data center capacity. They are focused more on like up-to-date chips. So that's very good as well. It's not just using like these old gaming chips back from like the 2020 era or like old crypto companies that are just switching from crypto mining to data center capacity. But white fiber, like I said, it just IPO'd. Maybe it'll have a bit of a pullback. I should have bought it around here at the end of September. I just hesitated. I was traveling. Fortunately, we didn't get the entry here. But what I'm really looking for is some sort of pullback, maybe dilution news, and then start buying the dip on this one because it's sitting at a $1.2 billion market cap. I think this could definitely double in price, maybe even triple towards $3 to $4 billion by the end of next year. Obviously, a lot of that is very dependent on how much demand there is for AI and all those things. But you just had Jeff Bezos saying that they're going to build data centers on the moon, which could be done at a much cheaper rate, the building here as well as setting up a base there and all these things. So people are very much focused on like these very futuristic concepts. And with that comes a lot of money behind it. Chegg, this was one that we just entered into. This is a very... I would say risky position, just because Chegg is getting its lunch eaten by ChatGPT, but it just did break out of this downtrend, right? So you had a few reactions here from this high through this high, and then it's kind of chopping through this range. Now it reclaimed and pushed back over this more recent downtrend. Really what I'd like to see is just a quick move towards 194, and then I'm probably just going to profit out of this position at 70 to maybe a little over 100% returns on options for November and December. It does have earnings coming up on November. This is kind of like a similar play to the original thought process on Upwork, because Upwork has slowing growth. It's basically flat. Now they're starting to see an uplift there because of AI. But Chegg is a declining revenue, but it's about 500 million in 12-month revenue. They have really good gross margins, similar to Upwork, close to 65 to 70%. However, they have like this bloated operating expenses, right? So they have a lot of headcount. What I really like to see is more cost-cutting measures, because they did do layoffs in May of this year. But Chegg does have its own content. It is starting to partner with institutions. They could probably cut out some more sales and marketing spend if they actually are successful with that. Maybe this is even like a private equity buyout, LBO sort of play, as well as they are suing Google. Google, they're saying that the AI search that you see when you search for like education, books, things like that for college, this is basically taking money away from Chegg, as they were like spending money to actually rank higher in the SEO. And so they are currently suing Google. And if they are successful, this could be potentially up to $100 million plus settlement. And at $171 million market cap, that could be huge, a huge catalyst for Chegg. Google is trying to dismiss this lawsuit. So if they are successful, then, you know, that would actually be bad news for Chegg in that sense. But like I said, even just current run rate business, if they do focus more on closing offices, cutting more headcount, trying to switch over towards more like this AI play, and partner with schools and institutions to drive their sales, then maybe there's a play here. But mostly this is just a technical breakout that I'm looking at. That's why I entered into the trade. So really just looking to hopefully see some uptick in volume here, kind of retesting around this 156 level. I'd like it to break out towards $2. And then of course we got November earnings, which I don't expect to be necessarily good. But back in May, there wasn't really much of a move here. And then same thing back here in August, there wasn't too much of a move until the day after. So I don't think earnings will really be that big of a catalyst. We're just looking to see this drift up and to the right. And then Intuitive Machines, this is the moon mission space kind of play here. This is starting to push through this breakout level. You're seeing a little bit of an uptick in volume, high short interest around like 28% or so, I think, right? So as this continues to get squeezed out towards maybe 20%, we can certainly see a push right towards that $13 to $14 level, which is where I'm going to be taking a lot of profit. So hopefully this can play out here over the next couple weeks. And then Target, we are in this position, mostly spreads for early November and middle of November. I'm really bullish here because they have a huge dividend, over 5% annual yield. $90.15. That's the level that we've been looking at. And you can see it's constantly rejected from that level. There's also some rumors here. We had this big move that they could be a PE buyout target as well, similar to Chegg. But I don't know if that will actually manifest itself within the period of time that we're in this trade, since we only got a month and a week or two. As this continues to push to the side towards the middle of October, the November 7th, 14th, and 21st contracts are going to become cheaper and cheaper depending on where price is. So I'm going to continue to scale into this position because I think around late October into the second week of November, on the 11th or on the 12th, November 12th is the ex-dividend date. And so I think that price will continue to drift higher as people are buying the underlying stock to receive that dividend, similar to how UNH moved before its very large dividend as well. So really solid setup here. Just got to get through this $90 level, and then we can definitely get a move towards 95, which is a little gap that's sitting here. And then there's bigger earnings gap is around $101. So I think Target has a really solid setup here. The premiums are good, especially on debit spreads where you can make multi like 3 to 4 or 5 baggers if done correctly as we get closer, and then try to catch that little drift higher as people are buying the stock. And we're seeing a little bit of a bounce on small caps, consumer staples, things like that. So really good setup overall. Looking at Unity Software, we have had a pullback now over the last week or so. It failed to hold this $43.52 level, and it finally broke down. We did have a bear gap that formed. It broke this consolidation uptrend that it was forming. There was a lot of lower volume during this time, and eventually it did break down. Meta decided to use its own runtime engine for AR and VR, so they dropped Unity. So that was bad for the stock. Although now the play really is centered on Vector, I don't think that is too much of a big deal. As well as on Friday, there was a bit of a security issue with some of its products. It was really just like an update that they pushed to their customers that were impacted by this security issue. And so they just have to make some updates there. So that's really not that material as far as like looking at a stock price. But around like 10:25 a.m. on Friday, it was announced, and then we had a bit of a drop. It actually broke below the retest of that broadening wedge, but it actually reclaimed it at the end of the day. So like on Thursday, we started to push through, and actually things were starting to look really good, that we were just hitting a retest and pushing higher. The news dropped. It tried to kill the price a bit. And so what we're really looking now for Unity Software is a break of this downtrend, right? So I do expect to see some sort of bounce at some point. There's still a lot of bullish call option activity for the 17th of October, as well as some later dates for next year. So Unity is definitely not dead as a play. It just kind of has to have a pullback at this point, right? Like from the lows in April, it's trading up over 200%. And then even if you just look more so like when it broke out here, it's up 78%. But now it's starting to retrace a bit, right? So you're having this mean reversion that's occurring. It's 50-day. It did break below that. The 200-day is still far behind. You have these bull gaps that are still here that are going to act as support. 35.58 is below, and then this trend line is trying to hold. So we'll see how that plays out over here on the next couple weeks. But Unity is really going to depend on its earnings in November. And that's because we really get to see a good view into Vector and how it's performing, which is their ad tech product line, right? So right now, AppLovin, they just got added to the S&P 500. It's had a crazy run up to the upside. It's over 231 billion market cap. Unity is only sitting at a $16 billion market cap now. So if they can continue to scale and steal more market share in the advertising space on Vector and Unity's platform, then we are going to see a push to the upside. Even 10% increase in market share, things like that, could be huge for the stock, right? That could be $10 to $20 billion in market cap. So we could definitely see more of a break to the upside on earnings, but it is risky, right? We have a lot of client testimonials saying that they're allocating more dollars towards Unity's Vector through advertising, which is really good. But we have to see what it looks like in Q3. In Q2, it just launched. There was a lot of bugs with it. It was just like low hanging fruit, like a 10, 15% uplift. If we see the continuation in Q3 in November, that could be a really bullish catalyst for the stock to push higher. And then of course, I do think that Roaring Kitty is still in this stock. He likes to tweet around holiday times. His positions are in January, 30 calls. He's still deep in the money. So he does have the luxury to continue to hold, not really say anything. But I think as we get closer to around those dates, he might become more vocal on the internet that he is in this position. And we could see a really strong bullish catalyst for the stock as retail starts to FOMO in. But really it comes down to the performance of Vector in Q3. So definitely watch out for. And then Zeta is kind of like in this bull flag as well. It's 1955 has been a very important level. It just made the acquisition with Marigold. It's only 325 million purchase price, so not really that big of a deal. And it's as a percentage of Zeta's total market cap. They're really just trying to cross-sell products. So Marigold is mostly focused on like loyalty programs, retention. Zeta can sell and cross-sell its products with that, so it's like a natural fit. Zeta is no stranger to these lower, small tuck-in acquisitions, so hopefully they can execute on that. But really what I'm looking to see is on the 9th, they have Zeta Live Day. Hopefully we can see a lot of positive catalysts for this stock to push higher towards its earnings and start moving back towards this 22 level breakout through there, 22.73. That's an important area to get over. And then we can definitely start seeing a move into this $25 to $27 level. Hopefully that happens in November, late December timeframe. I am in calls for December as well as January. So really bullish Zeta here. It's just kind of like consolidating, coiling in this uptrend that's been in this pattern for a very long time. It used to trade up here in the $32 to $38 range, and this company is growing, seeing a lot of tailwinds from the shift towards first-party data. I think Zeta can continue higher into year-end. I really like the trade here, as opposed to maybe like Upwork that's kind of a little bit over its skis, and it's got to kind of consolidate for a period of time before it starts moving. Obviously, like Apple, we're still strong in. I think that's going to go towards 270. Abcelera, high short interest here. We entered back into this trade after taking out over 128% profits on this trade. So we bought back in here around $6. Still think this can push much higher as it is a short interest play and it is breaking out to the upside, trying to hold over this 582 level. And then just real quickly, Amazon in the Prime Day, that's a catalyst. I think in November, December, we can see a pushback here towards 225 to 233. And then hopefully in December, we start to break towards all-time highs, since Amazon is still lagging behind the other Mag 7, which have all hit near or over all-time highs. And then, of course, AMD, still really bullish here, even despite the sell-off on Friday. It filled a bull gap, which is not great, but it still is consolidating, breaking out of this downtrend. I think it can continue higher. It just got into that low volume node, rejected, try to get back over 173 to 187, and then break out to the upside towards potentially all-time highs by maybe December, January. We definitely want to see some more headlines. Really, these data centers, they're not slowing down. There's just more and more adoption of AI. People are using it every day, as you probably are aware, and even in your own life. And I don't think that is going to slow down anytime soon. And on the backs of all these rate cuts, it's just more than likely the next several months is a huge opportunity with risk assets, small tech growth companies. We can definitely see a crazy move higher on the overall market towards 680 to 700 on SPY before the year ends. Like I said, this is a crazy run. There's no recession that's at least right immediately in front of us, and they're cutting rates, providing more liquidity into markets. So now's the time to try to take advantage of that little last leg up before there's probably a larger correction of sorts in 2026. So really interesting all around the markets, huge opportunities in front of us. Definitely join the Discord if you haven't already. And I hope you enjoyed your weekend. We're going to get after it this week in the markets, and I'll see you in the next video, guys. Peace.